What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, I will give you guys an update on the S&P 500 futures. Where did we open tonight at 6 p.m. since it is Sunday? So what does that indicate for where the market will open tomorrow? We will identify some of those key levels that we have been following along with very closely. And I will share with you guys my opinion on where do I see the markets going and what my strategy is going to look like for tomorrow going into next week. As always, if you guys enjoy this video, please make sure to drop a like. It really helps out with the YouTube algorithm and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future videos related to the stock market updates, investing, and technical breakdowns. Because these videos are going to be packed with some really important and time-sensitive information, so make sure that you hit that notification bell so you get notified as soon as I post a market update. So we've been following the S&P 500 futures for now almost 2 weeks, going as far as Thursday, June 11th, when we had this major sell-off in both the S&P 500 and the Dow Jones when they both dropped close to about 6%. So the market did gap up on Friday due to the fact that the futures market was essentially making higher highs and higher lows, as you guys can see right here. But even after the gap up, the markets essentially sold off during the day, and they were making lower highs and lower lows, as you guys can see right here. Now, over the weekend, the S&P 500 opened below the 3,000 level, and it was consolidating right here before breaking below its key support level, and then essentially rallied back up to 3,100 after Fed announced that they were going to start buying individual corporate bonds and ETFs with junk debt. So the markets rallied on Monday, as you guys can see right here, on June 15th. And then for the better half of last week, we have been consolidating, essentially trading sideways without any clear direction as to where the pattern is going to go, up until Friday of this week when the markets again gapped up. And I updated everyone on the fact that it is looking very similar to last Friday, June 12th, when the markets did gap up, but intraday they were making lower highs and lower lows as a sign of weakness. And that's exactly what happened last Friday when the markets did gap up, but then they sold off, making lower highs and lower lows. And then for the first time since we've been tracking this S&P 500 futures pattern, they broke below the red range, or the area of consolidation that we've marked very closely, sort of those four key levels that I have already previously mentioned. 3150 being a very clear resistance for the futures, 3130 also being a very near-term resistance for the S&P 500 futures, and then two support levels at 3080 and 3060. So the S&P 500 breached that level on Friday. It broke below, and in my previous market updates following up to that, and I essentially mentioned that since the pattern broke below that key support level and there was a weakness on the intraday pattern, essentially making lower highs and lower lows, as you guys can see right here on Friday, June 19th. Well, today the markets again gapped down, and we are down close to about 20 basis points. So it's not a significant drop, but we did open well below the red range that we identified last week as an area of consolidation. So that being said, the futures has been trading between the middle and the top VWAP. As you guys can see, it's trading between the yellow and the green line. So that is a good sign that it's making higher highs and higher lows. So it's not essentially selling off any further, and it's going higher as it did the previous time, and it's also not going as low as it did the previous time. So that is a sign of strength and a sign of an ascending pattern for the futures. Now, of course, this old support right around the 3060 level can now be acting as a very clear resistance moving forward, but we'll only find that out when the pattern does approach that 3060 level. Right now it's trading at 3056, so it still has a little bit of room on the upside to cover before we can find out whether this old support is going to start acting as a new resistance, and if the S&P 500 futures is going to get rejected here, essentially pulling back to the low for the pre-market, close to about a 1% drop at around 3027, which is where the market opened. So this candle that you guys see, the low for this candle was 3027.25. So if it drops down to that level, we're looking at another 1% drop, which can result in the market opening tomorrow gapping down close to about 1 to 1.2%. Now, that being said, any catalyst or any piece of news related to COVID-19 cases, related to the Fed, the liquidity, the stimulus check, can drive the markets higher or lower. It's really challenging to predict what type of catalyst is going to come out, because last week when Apple announced that they were going to close 11 stores in some of the states due to the resurgence in cases that we've seen, and then WHO came out and delivered a message saying that the cases and the virus is essentially approaching a new and a dangerous phase, That drove the markets lower, resulting in a huge sell-off, and the markets ended up red on the day. We did, however, end up green on the week, but we are still down on the year. So just some things that we need to look out for. Right now, I think the market is discounting the fact that we are seeing such a resurgence in cases. And yesterday we reported well over 32,000 cases. That is from back in last week of April. That was the last time when we reported over 32,000 cases. Now, from my previous market update, I also mentioned the fact that we reported over 30,000 cases on Friday, and that was the high from May 2nd, which was a 7-week high. So if you guys look at the pattern, we were on a steady decline in the number of daily cases that we were reporting marginally, but more recently we have seen that spike and we are increasing in the number of cases each day. So that's not usually a good sign, but again, if we do go into a second lockdown in certain states, that can again act as a negative catalyst for the markets, and I would not be surprised if the markets do retest their lows down to 3,000 level, or even further down to back to the support of 2920, which they have done back on June 15th and 14th, so last week, when they did gap down all the way down to 2920. So I wouldn't be surprised if that happens, but again, it depends on a lot of the news and a lot of macroeconomic trends and patterns and data that's going to come out next week, which is essentially going to drive the markets higher or lower. But I've already mentioned that my outlook on the markets right now as it stands is a little bit more bearish than it is bullish, due to the fact that we are seeing a resurgence, we don't have a vaccine, and the fact that S&P right now is trading at a much higher multiple on its forecasted earnings, and that was essentially a 20-year high when the earnings are going to significantly be affected due to the fact that consumer spending is so low. So those are some of the things that I'm thinking about, but let me know in the comment section down below, what do you guys think about the markets right now? Because in my opinion, I feel like we're in a really uncertain environment. Any catalyst can drive the markets higher or lower. Let me know in the comment section down below, what do you guys think about the markets right now? Where do you think the markets are going to head next week, and why? I want to know the reasoning behind your analysis and the explanation behind your outlook, whether you're bullish or bearish. Let me know in the comment section down below. I would love to learn about your analysis and your feedback. As always, if you have any questions, comments, please leave them down below and I'd be happy to answer them. Follow me on Instagram. You can reach out to me there personally, and also we have a free private Facebook group with just over 200 members that you're more than welcome to join. All the links are going to be down in the description below. We'd love to have you as a member. As always, happy investing, and I will see you guys in the next video.